Okay, guys, just like that, another week is upon us for the stock market, and you're at the right place. We're going to break down 5 stocks that I'm watching for this week, all of which are reporting earnings. So we have to break down the charts, the estimates for earnings, revenue, my thoughts, what I'm looking to do. But first, guys, of course, hit the like button. Do not forget to subscribe and get your free stocks from Moomoo. You have a couple more days to do that. Use the link down below or go to stocksurfest.com/Moomoo. Open up your account and fund it with at least $100. You get 5 free stocks and a $30 cash reward, and fund your account with at least $1,000. You get 10 more stocks, and guys, overall, your uninvested cash for now will earn up to 8.1% APY, which, guys, it's a no-brainer. And again, the clock's ticking, so use that link down below or go to stocksurfest.com/Moomoo, and let's get right into the video. So overall, on Friday, we had a very nice green day in the stock market, and it looks like SPY, which obviously is the S&P 500. If you guys didn't know, it looks like we are breaking out heading into this week, right? We're breaking out above the 50 and the 180 moving averages on the 4-hour chart, and now we're about $5-6 away from that 601 all-time high. So looking at the chart, we're heading into this week very bullish, especially here on SPY, and I believe on QQQ as well. QQQ is breaking out of this channel that you guys see right here that we talked about. We're above both moving averages now for the first time in a couple of days here on the 4-hour chart, so that's really good on QQQ. And now we're about $10-11 away from that 516 all-time high, which is about 2%. Guys, we can do that in a day, let's be honest. Is it guaranteed? No, but we've seen QQQ go up 2% in a day many times, right? That's not out of the ordinary. So yeah, that's looking good. Nice setup heading into this week. I think the Dow is as well. On Friday, we went up, 500 points almost, up 1%. We're about 300 points away from all-time highs. Very good news there for the Dow. Looks like here the Russell is very close to the recent highs, which after that, we're going to hit all-time highs most likely. So, guys, the moral of the story here, the gist of it is we're heading into this week looking bullish. As bullish as ever, right? I wouldn't be surprised if we hit all-time highs again this week after we've seen a bit of a pullback here in the last couple of days of trading. So, guys, that's what I'm thinking overall in these indexes. And let's get into these stocks now. Number one, we have CrowdStrike, which is ticker symbol CRWD. CrowdStrike is now near the highs from before the IT outage. Think about that. We were at 398 back in July. We then tanked to 195, and now we're at 372. We're about 26 points away from that high, and man, that was a buy the dip opportunity, was it not? And I personally, not to toot my own horn, I'm sure a lot of you guys did as well, I bought, I think, at 235. And I bought more, I think, at 248 on the way up here after that rebound. After we got that 195 low, I started buying on the rebound there. And yeah, now it's at 375, man, and I wish I added more. But CrowdStrike is definitely on the watch list here. As the company is reporting earnings, I think on Wednesday. Let me double check that, though. No, they're on Tuesday after the bell, the 26th of November. And not only did I call out those buys when I was buying it at 235, 248, whatever it was, but we also talked about it here when it was at 285. We talked about how this was support. We broke under it. It was resistance. Do you guys remember we called out the overall breakout about a month and a half, 2 months ago at 285, 290? And man, that would have been a nice trade as well. If you missed the initial dump off down here to buy down here, you could have bought the breakout there and you could have made a lot of money either way. So at this point, guys, I'm not buying more CrowdStrike, but let's say, for example, it somehow tanks after earnings, maybe guidance is rough. Who knows, right? I mean, and this thing gets back to the low 300 somehow, maybe I'll consider it. Maybe I'll consider buying more. But for now, I'm just waiting for their earnings. I have a nice position. I'm happy with it. I'm up a lot, so I have a nice cushion. And yeah, we'll see what they do. They're expected to report earnings per share of 81 cents versus 82 cents from last year on revenue of $983 million versus $786 million from last year, up 25% year over year. That's the projection, at least here for CrowdStrike. So yeah, if they crush it, they nail it, who knows? Maybe they go up and test 398, $400. But if they drop the ball a bit, maybe earnings or guidance is a bit soft. Don't be surprised if we do come down 320, 325, 330. Totally possible. And yeah, we'll see what we do from that point. So that's CrowdStrike. We also have Dell this week, ticker symbol DELL. Dell is also rebounding quite nicely after getting destroyed. I mean, destroyed, guys, from 185 back in the end of May all the way down to 85 by the beginning of August. We went down 53%, and now we are up around 65% out of that hole. And it looks like here we are breaking out of some critical resistance points. We hit 135 a couple months ago. Now we broke out of that, which is good. Looks like we're trying to fill the gap now to about 150, where the stock was back in early July. If that breaks, we could be going 161. We can see, obviously, the overall high is about 185. So these are a couple of gaps to the upside that could fill at some point. We'll see. But it all comes down to the numbers, and especially the guidance. They're after the bell on Tuesday, the 26th. They're looking to do earnings per share of $2.05 versus $1.88 from last year on revenue of $24.71 billion versus $22.25 billion from last year, up 11% year over year. Not bad. So yeah, that is what Dell is looking to do. Guys, we are a little overbought heading into earnings. We're up 65% off the lows. Doesn't mean it can't go higher, but I'm a little bit cautious, especially around earnings. If a stock is overbought, it's not that overbought. I mean, it surely could break out of 150 for all we know and go straight to 160. I don't know. It all comes down to earnings, but I'm cautious, right? I'm a bit more conservative these days when I'm trading, right? So that's DELL. DKS, Dick's Sporting Goods, is another one for this week. We can see this stock's been flat for a lot of the year. I mean, we've traded sideways between 180 to about 230, 240-ish. We hit 240 back in the end of August. So DKS hasn't been doing much. Hopefully earnings can shake things up a little bit. They're on Tuesday the 26th in the morning before the bell. So they're expecting $2, or analysts are expecting $2.69 earnings per share versus $2.85 from last year. So EPS will be contracting on DKS, and revenue of $3.03 billion versus, get ready guys, $3.04 billion from last year. So it's going to be down around 0.5%. In other words, pretty flat. So yeah, it all comes down to earnings. Let's see if DKS can shake things up a bit. I mean, we've held 180, 190 flat all year, which is good. But we're just not getting, it seems like every time, at least, especially in the last 2 months, every time we've gotten a 220, we tried breaking out of there. The buyers just failed. I mean, the momentum just completely died. I mean, guys, if I zoom in, you guys see right here, each time we've tried 220, buyers, they just lost. Or they just vanish. I don't know how to say it, right? But yeah, let's see if we fill the gap to 220 on good earnings. Maybe if that breaks, that'd be a sign for even more upside, a bigger run in DKS. So I'm going to set my alert now. I'll do one at 220. Why not? We'll put it there for now. And guys, make sure to sign up to the email list. I'm sending out an email tomorrow to all my email subscribers. It's free. I send it out every single Monday, my top 3 stocks for the week. So if you guys are interested, it's linked in the description box, also pinned in the comment section. Make sure you guys get in there. So I'm setting my alert at 220 here on DKS, and time will tell what that does. So we also have BBY this week, Best Buy, which they're on, I believe, Wednesday as well. These all might be on Wednesday, guys, for all we know. Yeah, it seems like a lot of them are. So they're on the 26th. They're not Wednesday, Tuesday. I keep saying Wednesday. Tuesday. What am I saying here, guys? In the morning, right? So BBY is down about $14 from highs, 14%. Nothing crazy. We're not getting a clear breakout, obviously, but we are looking good on the charts, right? We're holding an uptrend. We have a higher low right here, no doubt about it. So I'm thinking BBY is on the verge of breaking out, potentially on good earnings. Honestly, I really think that's going to happen. We'll see, though. It's not showing the full confirmation yet, but if we're breaking 90, 92, that's going to be the breakout spot. So I'm going to set my alert at 92. For now, they're expecting $1.29 EPS versus $1.29 from last year on revenue of $9.63 billion versus $9.76 billion, down 1.26%. So notice these retailers, Best Buy and Dick's Sporting Goods, very popular, no doubt, they are flat sales, at least projected, right? They're flat year over year. Interesting. Pretty interesting. We'll see how that plays out. Another one here, guys. The last one for the video, by the way, run the likes up. Make sure to subscribe. I think 75% of you guys watch the videos, but you're not subscribed. So make sure to hit that button, guys. I appreciate you all as always. Abercrombie & Fitch, which is one of those stocks you look at and you're like, oh my God, is this a tech stock? I mean, when you look at the charts, it's remarkable how much this stock has gone up. I mean, this stock was at $14 back 3 years ago. Actually, no, 2 years ago, right? Back in October 2022, and now it's at $150. Think about that. A 10x, essentially. Yeah, a 10x in A&F in about 2 years. Unreal. And now we're heading into earnings, I believe on, Tuesday in the morning, 26th. And we're set up interestingly. Look at this. We have a wedge on the 4-hour chart. Now we're at the top of the wedge, mind you. We went up 7% on Friday. Big move on Friday. Volume spiked up like crazy. So this could be the breakout spot. If A&F is able to get out of here, maybe we start gunning for the highs from, it looks like here we hit middle of October, 167. We also hit that point end of August, right? Maybe that's where we go. Maybe we break that, start going even higher. Maybe if guidance is amazing, right? So A&F looks really good at this point, guys. Watching it on the charts very closely on Tuesday morning, they're expecting $2.22 earnings per share on, revenue of $1.18 billion, which would be up 11% year over year. And EPS last year was $1.83. Again, they're expecting $2.22. So nice growth there in EPS. So, yeah, I'm going to set my alert. Might as well do that now before I forget. I'll put one at $1, or not $1, I wish $1, $155. Quite the difference. We'll do that now. Mark is at or above. And we'll see if we break out and start moving towards that 160, maybe higher than that. So what do you guys think? Let me know your thoughts in the comments. Run the likes up. Don't forget to subscribe. We're getting into a big week, guys. A lot of content is coming in the pipeline. And make sure to get your free stocks for Moo. You have a couple more days to do that. Open up your account using that link down below and fund it with at least $100. You get 5 free stocks and a $30 cash reward, and fund your account with at least $1,000. You get 10 more stocks, and overall your uninvested cash for now will earn up to 8.1% APY. So guys, what are you waiting for? Again, use that link down below or go to stocksurfs.com/moo. And with that being said, cheers. I got my nice smoothie right here, guys. Cheers. I'll catch you all in the next video.